Have y'all seen what's happened to Beyond Meat stock this past year? It's been a roller coaster. In this video, I'll share my research and explain why we've seen what we've seen. And then, if you stick around to the end, I'll give you my recommendation and tell you what I'm planning to do with this stock. Who is Beyond Meat and why should you care? Well, I'll tell you why you should care. Beyond Meat is a major player in a growing space. Beyond Meat makes faux meat, fake meat, plant-based meat, meat that's supposed to taste like the real thing, but it's not. I can tell you I'm a Beyond Meat consumer. I've been eating it for about 2 years, especially their claim to fame burger patties, and I love it. Let me show you why. That's good. It tastes just like a real thing. It cooks just like a real thing. So if you haven't been paying attention, veganism has been gaining popularity. People adopting a plant-based diet have been skyrocketing over the past few years. You've seen celebrities like Venus Williams and Chris Paul, and now I'm sure you have a number of friends that are vegan as well. People who are concerned how their eating habits are impacting the environment and overall just want a healthier diet. And also people that want to fight animal cruelty. And who's the benefactor of this veganism movement? Well, companies like Beyond Meat, who are in this space and have their products ready to serve this growing population of people. In May 2019, Beyond Meat went public. And since their IPO, we've seen the stock go to Pluto and back. When this stock hit the market, it came at an initial price of $25 a share. Within months, that price had risen to almost $240 a share, giving initial investors almost a 10x return. Following that, we saw the Beyond Meat bubble burst. Following this initial surge, we saw the stock come back to earth very quick, dropping to $70 around Thanksgiving. But it wasn't done. It fought back and went up to like 120, 130 before the Rona event. And after that, yeah, we saw it drop, 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 drop. And all of a sudden it was under $50 a share. But since then, since this moment, it's been on an elevator. It's 3x since its bottom lows in March. So now let's take a deeper dive into this company, dissect what's been going on, if this volatility is justified, and what the strengths and weaknesses are so we can determine what might happen next. So let's talk about the positives first. We've seen rapid growth in this company. Year over year, we saw a 239% increase in revenue. Not only have we seen this rapid growth, but considering this industry, and this is just a baby of an industry, there's potential for much more growth into the future. CNN Business reports that by 2040, more people might consume meat alternatives to real meat. And I'm not done, I'm just getting started. Next, sustainability. You look at real meat is subsidized by the government. That means the government spends money, your tax money, to make meat prices cheaper because the real process of making meat is very expensive. So when you buy that steak at the store, you're buying it for less of a price than it actually costs to make. 78% of agricultural land is used for grazing. 29% of agricultural water goes to animal production. Now, coupling the environmental benefits of this product with a great tasting product, right there you have millennial gold. And not only are millennials digging this stock, just listen to this bit from Jim Cramer.
Going against Beyond Meat, it's going against history. My skeptical friend David Faber will say, Jim, it's still a very small company. Well, David, so was Amazon, so was Facebook.
And moving forward in the future, Beyond Meat plans to slash their prices. Right now, a major problem for them and why they're not reaching the amount of people outside of the vegan community is partly because of their high prices. But last quarter, they announced that they are planning to slash those prices. And you have to go to Whole Foods to get this, right? No, not anymore. That used to be the case, but now you can find it at Kroger, at Target, at Walmart, even Aldi. And at some of these places, you can find it under $4. And if you're not buying Beyond Meat from the grocery store, perhaps you can find them when you go to one of your favorite restaurants. They're in a handful of fast food chains across the country, like in Dunkin', in Carl's Jr., in BurgerFi. They're having a trial right now with Starbucks in China. And they're also in some of the meal delivery services like HelloFresh. Selling to these other restaurants and companies offers great potential growth for Beyond Meat into the future. And beyond the market here in the United States, Beyond Meat's also trying to push their product abroad. We've seen Beyond Meat go into Europe, like into stores like Tesco, and in Latin America. And now even into Chinese grocery stores with their new partnership with Alibaba. So now let's take a deeper look into the financials, starting with the balance sheet. Overall, this is an extremely healthy balance sheet. Take a look at their current ratio. Their current ratio, you take their current assets and divide it by their current liabilities. Anything over 1, the company's thought of being solvent. Right now, looking at Beyond Meat's current ratio of almost 6, this means they have so much cash available to grow. They could pay off their total liabilities 4 times over with the amount of cash they have. So now let's take a look at the valuation. Right now, the market cap for Beyond Meat is about $9 billion. That means if you buy 1 share, you're buying a fraction, a small sliver of the company, but at that valuation of $9 billion. So when you take a look at their revenue's been growing, but right now, you're paying 27 times revenue. That is rich. That is really rich. There's no mistaking that. This is a growth stock. There's no value to be had here. Take a look at the forward PE of 833. This is what they're projecting, not actually what they have in profits, but what they're projecting for profits. And they're projecting that this valuation is 833 times what they project to make in profits. Now, I wouldn't get too hyped on a growth stock PE just because right now they're not profitable. But even if they are barely profitable, let's say you turn a net profit of -$1. You don't have a PE ratio. Most companies don't show it because it's negative. But let's say you make $2 more, and all of a sudden now you have a profit of $1. All of a sudden your PE ratio is going to be over 1 billion, which makes no sense because they say an average PE ratio is around 20. So it doesn't make too much sense to evaluate growth stocks with the PE ratio, but yet it's interesting to see. And at this valuation, this crazy rich valuation, for me to buy this stock, I have to be certain about it. So some concerns I have about Beyond Meat. Well, first, their competitors. Right now, it's really only impossible. A few months ago, Beyond Meat started a trial with Starbucks in China. This was great news, causing the stock to rise during this recovery after March. But just recently, Starbucks announced that they're going to be carrying the Impossible brand in the United States, dealing a major blow to Beyond Meat. Meanwhile, Beyond Meat and Impossible continue to duke it out for the approval of other fast food chains and restaurants across the country. For the long term, if it's just these two companies, I think that's a great sign because this has potential to be such a huge space. And if you have just one or two major players, I mean, that's great for both because they can both grow together. You can see like a Pepsi and Coca-Cola situation. But there's a fear that it might just not be these two. But think, what are the barriers to entry? Well, you need a nice formula and a good tasting product. If this industry is to grow, you can assure that more companies are going to throw billions and billions of dollars to make a product on par or better, or at least to compete with Beyond Meat and Impossible. So this can be a serious concern. More competitors throwing their hat in the ring in the future. Another concern is they might be a one-trick pony with the burger patty. Now that's not a bad thing, but to grow at this rate, they're going to have to do other things. And they're trying. Something very exciting is they're going in a KFC with the Beyond Fried Chicken. We'll see how that plays out in the future. So following Q1 earnings, this stock soared. Investors were excited that revenue outperformed what was expected. Overall, the Rona situation did impact sales to restaurants, but it more than made up for it in sales in grocery stores and at retail level. Another major concern is Q2 earnings are coming up. Now let's flash back to Q1 earnings report. Investors were excited. Overall, the reports were much better than expected, especially considering the Rona situation. To recap, sales to restaurants were down, but that gap was filled from sales in grocery stores. And now, investors reacted so positive, the stock soared after that, going from around $100 a share to over $150. Now, come Q2, there could be some drawback because the loss in sales in restaurants might be more severe than anticipated, and that gap that made up from the grocery stores might not continue all the way through. Finally, another concern, there are reports saying that actually Beyond Meat is having a negative impact on the environment. Now, any major operation is going to have a major impact, and this report might be hogwash, but nevertheless, it is a report. And when there are reports like this, you're going to have investors that have fear. And if investors have fear, that's going to cause people to stay away and keep the price at bay. So finally, what is my recommendation and what do I plan to do? Overall, Beyond Meat, it's a great company. I'm going to continue buying their products. But as far as investing, I'm going to stay on the sidelines. I'm a little weary right now. There's a few things I need to see and a few concerns that I need cleared up. So I'm going to continue monitoring the stock. I'm going to put it in my watch list, wait for Q2 earnings to come out, and then reevaluate then. Eventually, this is a position I want to hold long term and watch this industry grow and watch this stock go to the moon.